Hello everybody, welcome back to the channel. I have an amazing video for you guys today. Here's an article from CNBC basically predicting that the housing market is not going to crash. It's actually going to start going up. Here's what's happening with home prices as mortgage rates fall. This is the biggest thing, is that mortgage rates have fallen last month and mortgage applications are way up. And this article is basically talking about how some of like the urban areas that saw big growth during the pandemic, where people left the big cities and went to towns like Boise, Idaho, right? That saw an explosion of people basically coming from the Bay Area. Well, those prices in that area just ballooned, during the pandemic. Well, those have really made a turnaround. But if you look at the rest of the United States as a whole, you know what? Things are actually looking pretty good for the housing market, and people, I feel like, are starting to jump back in. Remember, buying in the winter is the best time to buy because you're gonna have the best deals. It's just the problem is that people don't like buying in the winter because people like buying in the summer. Their kids are out of school. It's pretty. You can see how nice the neighborhood is, and it just motivates a lot of buyers. So most of the transactions do happen in the summer, but now we're seeing, now that the mortgage rates have slightly dropped over the last month, you're definitely seeing people coming back, and it's going to be really interesting. Now here, check this out. Let's read a little bit from this article. I'm just going to pull up some quotes here where it says, while price deceleration will likely persist into the spring of 2023, when the market will probably see some year-over-year declines, the recent decrease in mortgage rates has stimulated buyer demand and could result in more optimistic home buying season than many expected. A lot of us, I think, are expecting a huge crash. Why are we expecting a huge crash? A lot of people think it's because the United States basically printed $10 trillion to fight coronavirus. Basically, all these people were getting checks sent to them, and we ended up having huge amounts of inflation. And then, but as things started opening up, then we had basically a job crunch, right? Companies couldn't get enough people to work. Right now, we have not record low, but we have super low unemployment, which is one of the reasons why everything is still very expensive. People are still spending, and a lot of people don't see a crash. Now, we do have some things in the horizon which could trigger a crash, like Congress is expected the Congress in the United States is expected to pass a new debt limit. So basically raising the debt limit, and it has to pass by the House and then signed by the president. And a lot of Republicans are saying no, like, we're not going to increase. They want to actually cut government spending. And it's sort of a problem because if the Democrats and Republicans start fighting over the debt limit and we go into default, that means that we're going to have the country itself, has to pay back the money that we've already used at a higher rate, right? So if that happens, then the rates will go up even more, and it would definitely slow down the economy, right? Because we won't be able to do anything about it. The mortgage banking won't be able to do anything about it, because again, this will be coming at a country level, right? Higher interest rates basically for the country and the country's debt. So it was really gonna, strangle us a little bit. But if they could, pass the bill and keep funding the government, and basically problem there is that we keep adding to our debt. How long can this country borrow before it all comes crashing down? Well, nobody really knows right now. We just keep printing more money. Remember, it's something like we're putting around 3 to 4 trillion a year. We spend about 3 to 4 trillion a year on like all our stuff, but we're only bringing in about 2 to 3 trillion in tax revenue, right? So we are always adding to that deficit. Every year is another trillion and another trillion. Maybe when we have like a lot of issues like a coronavirus situation, then we end up adding more, or we have to go to war and we have to print more money to make more tanks and more bombs and whatever. Well, that ends up, adding to the deficit, right? Remember, sending troops overseas, you got to feed them, you got to transport them, and it gets very pricey very quickly, right? Again, we don't. This country does not generate enough taxes to pay our bills, and it's okay now because we're the top economy in the world, right? Everybody looks to the United States, for that. But if anything changes, you can see that everything could come crashing down. I don't think overnight, but again, the only way housing market is going to crash right now is if we see massive amounts of layoffs, and right now we have super high employment. So I just don't see that happening anytime soon, right? I have seen some tech jobs, basically do some layoffs, but not drastic enough to really make an impact. Now, it could make a small impact, but again, we need that '08 kind of like people getting laid off to really create, a massive change in prices. One of the reasons '08 happened was because a lot of companies were investing their mortgage. That there was a thing called mortgage-backed securities, where you buy a house and then that loan gets packaged with all these other loans, and then they gets put in the stock market. Why? Because it's an asset for a company. When people are paying their mortgage, that's the asset, right? That loan is getting paid back and their asset grows. And then people can then trade those assets, these mortgage-backed securities, in the stock market. The problem right there is that when people stop paying their mortgages, it triggered a sell-off of those stocks in the stock market, which then triggered a bigger sell-off with across all companies in the stock market, and it made an crazy crash. Remember, a lot of these people investing in this mortgage-backed securities were banks, big institutions. So when these fraud, these fraudulent mortgage-backed securities, not fraudulent, but delinquent, I would say, because people stopped paying their mortgage. When those started to fail, it just brought down the bank stocks, because the banks were heavily invested in those mortgage-backed securities. And when the banks fall, everything falls, right? We had banks like Washington Mutual go out of business. And, obviously for people who had money at that time, they probably could have made hand over fist, buying the lows of the stock market. But for a lot of people, it was hard, man. A lot of people got kicked out of their homes. I definitely don't want to see that again. But it is something to think about when you think about the national debt and how that could impact our life. Well, it is, right? It will, unless we either, figure out how to cut spending, maybe raise taxes, a combination of cutting spending and raising taxes, and maybe having a little bit of higher interest rates. For the time being, maybe a year, 2 years, 3 years, 4 years, get our books in order, get everything under control, and then you could see just immense growth coming from that. So that's kind of like, it's either we deal with the problem today, or we deal with the problem tomorrow. And I think the way we have been doing it is we've been kicking the can down the road, but that can is getting bigger and bigger and bigger, and it's going to be harder to kick. And that's my biggest problem, is we got to be careful. But now, as far as the housing market, looks like it won't be, still very, very expensive. Homes are very, very expensive. It might be harder to see those prices really come back down to that 2019 level. All right, well, what do you guys think? Do you think we're going to see a crash? Do you guys think we're going to see a big boom, or do you think we're going to go sideways? Please comment down below. I really want to hear your feedback. And if you do like these videos, don't forget to share it with anybody who might be interested. And thank you guys so much for watching. And please, if you're not subscribed, go ahead and smash that subscribe button, and go ahead and like and leave a comment. Thank you guys so much for watching. I love you guys, and I'll see you tomorrow on the next video.